Investors worldwide are witnessing a global stock market crash. Nikkei, a leading index of Japanese stocks, closed the day down 12.4% on Monday. The Taiex weighted index on the Taiwan Stock Exchange was down 12%. Dow Jones Industrial Average futures fell by 444 points, down 1.1%. S&P 500 futures and Nasdaq futures also dipped 3% and 5.5% each. The recent sharp decline is a part of a larger global stock market meltdown triggered by events of the last week. The US Fed keeping the funds rate unchanged, the Bank of Japan rising its interest rates, and escalating tensions in the Middle East. Several key factors have contributed to this downturn. Let's talk about US economic concerns first. The underlying market turbulence are growing fears of stability in the US economy. The recent stock market decline comes on the back of poor jobs data, which raised investor concerns that Federal Reserve could have made a mistake by leaving interest rates unchanged last week, and that the economy is headed for a recession. Now, Fed Chair Jerome Powell hinted at a September rate decrease during the news conference earlier last week, but a sharp downturn in the labor market has raised questions. Recent economic data from the US has been troubling. For instance, unemployment rates have risen to their highest level since October of 2021, hitting 4.3%. According to data released on Friday, the US economy added only 114,000 jobs in July, significantly less than the market expectation of 175,000 jobs. The unexpected rise in unemployment has fueled fears that the US economy might be heading towards a recession. Such fears have a global impact. Then there is the tech sector weakness. The tech sector, a major component of the modern stock markets, has been experiencing a significant volatility. Tech stocks have soared this year in a rally which was fueled by excitement over artificial intelligence technology and advancements. Sell-off after disappointing earnings from tech-focused companies such as Amazon, Alphabet, Intel have exacerbated concerns that stocks may have become too richly valued. Leading US tech stocks have seen sharp decline, which has had a domino effect on other markets as well, including Japan. The tech sell-off is driven by various factors, including concerns over high valuation, regulatory pressure, and broader economic uncertainties. And finally, the negative investor sentiment. Investor sentiment has turned notably pessimistic due to uncertainties surrounding economic policies and potential future action by central banks all over the world, particularly the US Federal Reserve. Speculations about further interest rate hikes to combat inflation have added to market jitters. Now, higher interest rates can lead to higher borrowing cost and slower economic growth, factors that typically weigh heavily on stock markets. This, coupled with escalating geopolitical tensions in the Middle East, with the possibility of a spillover to other oil-rich countries, has jolted investor confidence. In terms of daily points fall, the Nikkei witnessed a record decline. The 12.4% loss on Nikkei was the worst day for index since the Black Monday of 1987. Among other Asian markets, South Korea's Kospi plunged 8.1% before trading was halted for 20 minutes. The sentiment was echoed across Asian and global markets.